Looking at the Nifty Bank side, because from a open interest point of view, the open interest has come down significantly for Nifty Bank, and especially foreign investors, they have been reducing the open interest, while the rollover is around 49 odd percent, which is there. Do you think that we are going into the next series, January series, on a very lighter note as far as Nifty Bank is concerned?
Yeah, there's slight bit of underperformance which is there in the banking index, both in terms of price as well as in terms of positioning. The best way to try and look at this is to look at the internals of Bank Nifty, and you don't have any sign of I would say rally hope coming back into the private sector banking names. You look at the likes of Axis Bank, HDFC, ICICI Bank, Kotak Bank, and you can literally draw a flat line in the last 4 or 5 days, and these price actions have been very, very flattish for these large cap stocks. And then when you try and map this up over the last 1 month, the trend for these stocks on the large cap private sector banking names is on the negative side. What was earlier happening was when the banking index was going to an outperforming spree, it was purely on the back of the PSU banking names which are going through a robust price action. Even those stocks and the indices over there have gone through a correction. So that's why the weight is now too much heavy on the banking index, because the PSU banks are not performing and the private sector banking stocks are underperforming. So one of them has to try and go into a reversal mode. Either you need to see the private sector banking stocks trying to make a comeback, or some resurrection happening into the PSU banking names. Only then I would believe that the banking stocks will try and get back into that zone of outperformance. So far, the only two sectors which are outperforming are the Nifty IT and the metal index.
Kunal, what about the breadth of the market though? Is there a likelihood that that may open up?
See, generally what happens is, Aisha, if the tone of the market breadth remains negative throughout say for the first half of the entire expiry month, it tends to carry forward for the first week of the next expiry. Unless there is something new which happens in terms of data points, which doesn't look like the case, because had it been during the budget, then maybe that could have probably played as a sentiment changer for the markets. But so far, I'm expecting that maybe the first week of the month of January, we would start off in a very tepid kind of a market breadth note.
Okay, on that note, let's get your stock ideas.
Yeah, so there's a change in terms of sectors. The oil marketing companies are looking attractive. We are seeing a breakout back again into the three major oil marketing companies. So I would pick IOC as a short-term pick. The stock heading towards a breakout above 160 levels yesterday. So we'll look out for near-term target closer to 168. Stop loss could be kept at 157. And I'll initiate a sell call over here, and that's on M&M, because the stock yesterday managed to give a breakdown on the short-term charts, a swing breakdown. So would look out for targets in the range of 35.40 and stop us at 36.40.
And M&M sell is only an intraday call, right? Or do you sense that the stock may languish for a while from here?
See, I've been making this point over the last 2-3 months that the stock is very overbought, and it's time for the stock to go into a moderation. Either it goes into a price-wise correction or at least a time-wise correction, but I think that's due for the stock.
Okay, understood. That's an interesting take on M&M.